Welcome back. The CEOs of the Business Roundtable and former President Donald Trump's campaign confirmed yesterday that Trump will participate in a moderated discussion at the group's private June 13th meeting on how he will restore prosperity to the economy if he wins the election. President Biden was also invited, but he cannot attend because he says he'll be overseas for the G7 summit. So White House Chief of Staff Jeff Zients is set to give remarks in his place. The meeting could be pivotal for both campaigns as they try to reel in support and donations from business leaders. Joining me now, former Soros Fund Management Chief Investment Officer and Key Square Capital Management CEO and founder, Scott Bessent. He's also a Trump donor, and he has been talked about as a potential Treasury Secretary. Great to see you, Scott. Thanks very much for being here. Good.
Thanks for having me.
So tell us about your expectations for this upcoming Business Roundtable. And you're going to be speaking later today at the Manhattan Institute. The Fallacy of Bidenomics and a Return to Central Planning is the title of that speech. You say the speech is already on the website?
Yeah, so anyone who wants to read it can go to the Manhattan Institute website. They're going to put it up today. And so I'm publishing the speech in advance, and then I'm going to do a fireside chat with the president of the Manhattan Institute.
So tell me about that speech and what points you want to make about Bidenomics today.
Well, I mean, look, it's really just a return to central planning. It's what didn't work in the 60s and 70s. And, you know, it's almost like the Joe's 70s show. The failed policies, and, you know, it's the exact opposite of what we saw under Donald Trump and Trump 1.0. You know, there, the free market was released, deregulation, everyone did well. You know, lower income, upper income, the markets did great. Under Bidenomics, which I like to call Biden-itis, because it's kind of like an acute disease. You never know when it's going to be fatal. You know, we have this central planning, and their macro framework, I think, is just way out of line, and they keep trying to make a bunch of micro, you know, kind of in-flight adjustments that, you know, don't work, and, you know, it hasn't been great for the economy. I've called this the anabolic steroid economy. You know, it looks great on the outside, but inside it's kind of killing your organs. And, you know, some of the headline numbers are fine, but, you know, like what we're seeing now from all the surveys, if you're in the top 20%, if you've got assets, and, you know, I've been talking about the Trump stock market rally.
Yeah.
If you own stocks, you're doing great. Bottom 50% of America has debt, and these high rates that pin up the inflation is killing people.
Yeah, I mean, definitely the inflation numbers remain sticky, they remain elevated, and President Biden doesn't seem to acknowledge it, that people are actually hurting. I've seen recently a lot of Wall Street billionaires coming back to Trump. What are you seeing in terms of the fundraising side? Are you seeing, I mean, Steve Schwarzman came back, you've got Bill Ackman, others out there talking about Trump. Has the conviction, the guilty verdict, changed anything?
Well, I think that there's a famous Russian movie called The Leviathan, and it's about a businessman who gets pulled down by a local apparatchik. And I think a lot of the business community is thinking the Leviathan could come for me one day. Mm-hmm. And you know, people are upset about this verdict, and I think it's galvanizing the base and bringing new people in. You know, as you and I were just talking about, if you had a model, and I think the Democrats probably had a model, that if we indict him, Donald Trump will go down in the polls 0.8%, and if there's a conviction, then he'll go down 2.5.
Wow.
Well, the model's blown up in their face.
Yeah.
Every time he's been indicted, his popularity goes up, the fundraising goes up, and I tell you, it was a blowout fundraising after the verdict.
And you think because people think it's a sham?
Well, I think people are very uncomfortable with the way this was handled, mm-hmm. and you know, it could happen to any of us.
Yeah. Let me ask you about the global economy, and certainly Trump has had great relations with other leaders across the world. We're waiting this morning for the European Central Bank to cut interest rates. I don't know if you think that we're going to get it cut today, but you're out with a new piece in the International Economy magazine. You lay out 6 common sense steps to help jolt the U.S. from its productivity slump. One of those steps is to halt unchecked immigration. And this is a topic that we get into every day. You write this: the massive flood of undocumented workers into the U.S. workforce creates destabilizing model uncertainty for U.S. businesses. Why pay to increase worker skills or automate production processes when there is an ever-expanding supply of cheap labor? Great point, Scott. Optimizing output per worker becomes less imperative when a company can decrease its wage bill by drawing on a burgeoning labor pool. Now, Scott, that's one issue. The other issue is that a lot of people think the Democrats want those people to become voters. Are we going to see illegal people voting?
Well, I hope not. We're already seeing them vote in some municipalities.
That's right.
And it seems very problematic to me. You know, how do you tell these new voters, well, you can vote for the mayor of Washington, D.C., you can vote in this municipal election, and then when they show up on November 5th, you know, you're not allowed to vote. So, you know, I do know, you know, Michael Whatley, Larry Trump at the RNC, that they are laser focused on voter integrity.
Yeah. So go back to those 6 steps that you write about in the magazine in terms of getting this economy back in shape.
Yeah. At the end of the day, it's only productivity that drives a nation forward. You know, GDP is population growth or workforce growth plus productivity. We're seeing this unproductive workforce growth that's driving the economy, and you know we're going to get some economic numbers tomorrow, and it's very difficult to predict what the jobs numbers are going to be because of this, you know, unchecked immigration.
Right.
But, you know, we need more capital investment, which is what really the Trump Tax Cuts and Job Act did. At the end of the day, high return on capital and making the economy and policy more friendly for investment is what drives productivity.
By the way, do you think the ECB cuts rates? Should they be cutting rates right now?
I think inflation there is a little sticky, but you know, overall their economy, they're more linked to China trade than we are, especially in Germany. So the slowdown in China, the excess surplus or the surplus of goods and the disinflation that China is exporting to the rest of the world is hurting them a bit more.
I see.
So
Great
yeah,
point.
they should be.
Louisiana Senator John Kennedy is accusing Treasury Secretary Janet Yellen of attempting to boost the economy ahead of the presidential election, something you and I have spoken about before. He did so during a Senate Appropriations Subcommittee hearing earlier this week. Take a listen to this. I got to get your reaction. Watch.
We're not trying to time the market. We have a policy that we want to hold the issuance of short-term bills in line with recommendations of the Treasury Borrowing Advisory Committee.
Can I say something now, Madam Secretary? What you're doing, you know it and I know it, and all those people sitting behind you know it. You're paying 5% to borrow money when you could pay 4% to borrow money. You announced you were going to do that back in November 2023. You're working cross purposes with Jay Powell, who's
We're not working.
And the reason you're doing this, is try to give the economy a sugar high 5 months before an election.
Ha! That's something that you discussed before as well. Is he right?
He's 100% right. And I think Secretary Yellen's been very disappointing. In an article in the International Economy, 2021, I called her a distinguished public servant. Now I would say she's become a political apparatchik. It's very disappointing. But more disappointing is that she is in charge of the full faith and credit of the U.S. government, and she is running the world's largest carry trade. She is financing at the short end, and that, you know, what she said is a little bit of sophistry. TBAC did not recommend shortening the debt. And I'm starting to look at, but I've been doing this for 40 years. And, and in 40 years, every emerging market blow up I've seen starts like this. Going into an election, the party in power gooses the economy with massive government spending. So we're going to have 6 or 7% budget deficit this year, which we've never done in peacetime or not a recession. But more importantly, they move the borrowing to the front end. And Senator Kennedy is right in line because Janet Yellen has, in effect, taken control of the Fed. She has usurped monetary policy. And, you know, look, she's former chair of the Fed.
Yeah.
She knows what she's doing. So, you know, when
Well, Jay Powell is probably fine with that because he thinks he's going to get appointed again.
maybe by Biden.
Right.
Maybe by Biden.
But not by Trump. I know that.
Yes. And, the other thing that I think your viewers should be aware of, we in the financial markets know, is that Donald Trump, he wants his views on interest rates heard. He is not going to politicize the Fed. The Fed has already been politicized, and it is by Janet Yellen. It is by the Biden administration.
Yeah, I'm glad you said this, because this article recently in the Journal about Trump trying to, get involved with the Federal Reserve. Meanwhile, it's been actions like what Treasury Secretary Janet Yellen is doing. Joe Biden said, "Oh, we're going to have a cut. Well, I'm sure we're going to have a cut," as if he discussed it with Jay Powell. Who's really affecting the Fed? Yeah. It's the Biden administration.
Yeah, and Maria, if we can go back to the original sin, the original politicization of the Fed was 2021. Jay Powell's appointment was the latest this century. That's when the inflation took off. It was very clear in his Jackson Hole speech in August 2021. He knew inflation was heating up.
Yep.
But the Biden people kept him under their thumb until November with the latest appointment this century. That was the original sin that set off this Biden inflation.
Yeah, and then he started saying transitory over and over again because he had Lyle Brainerd, at his heels wanting the job.
Yeah.
So a little politics going on there as well.
Yeah, and what's driving me crazy now is they're trying to, create this boogeyman of Donald Trump 2.0, that he's going to cause inflation, that he's going to interfere in the Fed. Just look at 1.0.
Yeah, and the media goes right along with it. I saw the Bloomberg story echoing everything that they told him to say. Scott, it's great to have you here this morning. We so appreciate it.
Good to see you.
Thanks for your great work. Scott Bessent here. A quick break and then